Would it help if the markets freaked out a little more?
No, let's be clear. Let's be clear. Our objective here is to do the right thing by the economy.
But as Washington continues to debate the nation's debt crisis, Wall Street is getting nervous.
I think what we're seeing is a traditional thing that when the market looks unsteady, when investors don't feel confident about the near term, they end up selling the more volatile issues first.
Indeed, the Russell 2000 index, which tracks smaller U.S. company stocks, fell nearly 3% on the day, and the Dow Industrials average plummeted nearly 200 points. Stocks have been falling broadly since last Friday as the August 2nd deadline for raising the U.S. borrowing limit approaches. House Speaker John Boehner had planned to hold a vote on his debt limit plan, but that was postponed after conservative lawmakers balked at the proposal. That helped to unsettle the markets early in the day. Later, news from the Federal Reserve showed the economy deteriorated in much of the country this summer, helping to hasten the sell-off. However unsettling the news coming out of Washington may be, stocks are reacting positively to stronger earnings reports.
I think that in much of the recent trading activity, we've had most of the declines take place late in the day because some investors don't want to get caught overnight in case additional bad news happens to come out. But certainly this market is feeding not only on lack of news coming out of Congress, but also whatever news that they can see regarding the pulse of our economy or the pulse of earnings.
The uncertainty surrounding the debt issue in Washington is sure to keep markets on edge in the coming sessions. Lawmakers have until Tuesday, August 2nd, to finalize a plan to raise the country's borrowing limit. A failure to do that risks putting the nation in default on its growing debt obligations. Mark Hamrick, Associated Press.